Welcome back, guys, to another crypto investment strategy update. Today, it's October 12th, 2020, and I wanted to kind of give just a general update about my thoughts. Quarter three, I did not do an investment update, but I was very busy with my son. He's going on 3 months now, so kind of like do the math. You can figure out why I wasn't able to do that. But it's important for me that I continue to just document this journey and share my thoughts for those of you who are kind of new to my channel, because I have had a lot of new subscribers over the last 3 months or last quarter. The reason why I do this is, one, because I want to hopefully be historically correct. I want to be able to go back, look at these videos, and say, yes, the way I was thinking is the reality of how the world played out. But two, it's also so I can just go back and critique myself and critique my own thinking. I think one of the main reasons, and this is kind of going to be, I guess, the theme of quarter four 2020, is a lesson. It's the second hardest lesson that I've learned in my investment strategy, which I guess I started really getting into markets and really trying to become a student of global macro when I was 23. So in 2017, I think I was 24. And I primarily focus in digital assets, NFTs, ERC-721s, crypto, digital assets, crypto commodities, cryptocurrencies, digital collectibles. This is the space that I specialize in. But I dabble in other markets, precious metals, commodities, stocks, because I really want to have a holistic understanding. And the first biggest lesson I learned, I've talked about a lot, was in 2017, whenever I bought Bitcoin at like 17,000, and it's actually on the bottom. It was on the decline from the 20,000 peak. So it peaked at 20,000, dipped down to 17,000, and by then I had become bought into the thesis. And so I just started buying dollar cost averaging, which is what I always recommend. And so the lesson there, which I never actually actualized those losses because I've just continued to hold on and continued to purchase more and more. And the lesson there was timing. It was a lesson of timing. It was about, you can have the right thesis, but your timing can be wrong because the thing you're looking at can be temporarily overvalued. And so it was kind of this lesson of buying something and having the wrong time, the right thesis, wrong time, and then getting punished by the market because I subsequently had to watch my investment dwindle in its value over the course of 2 years. I'm now in the green in that investment, so no worries. This one's even hard to talk about because very early on in my investment career, I've made videos about different companies that I've been bullish on. One that I've been the most proud of was Square. I made a video about Square. I talked about why I got into Square, my thesis around the company, talked about how I thought, this was like about 2 years ago, I believed that Square was going to take market share from traditional banks. And that was the thesis, really. And I dollar cost averaged into Square over the course of 2 years. My basis, my cost basis by the time I was done putting money into Square was about $56. And in March of 2020, when a Bloody Thursday, Bloody Tuesday, whatever they're calling it now, the market sold off in this like coronavirus panic, right? And I became convinced that we were entering into a deflationary period. I'm still convinced that we're entering into a period of deflation. I believe that asset prices were going to go lower over the course of the next 2 to 3 years, 3 to 4 years. And that Square stock, what happened in March was it went down. My cost base was about $56. At one point, I think it hit like $36, $40. On the rebound, when it hit about $56 again, I decided that I was going to sell my Square because I just wanted to have the money. I didn't want to lose money. I wanted to at least get my principal back. And I had convinced myself the market is going to have a slight rebound, but these stocks are going to go lower again, and I'm going to be able to buy back Square at $34 or $36. That's what I had believed. And timing is important. It's very important. You don't make money in investing unless you sell, you make money. So I decided that I was going to try to preserve my principal investment, and I sold within 3 months: March, April, May, June. March, April, May, June, July, August, September, October. Okay, so it's been about 6 months. Here we are, and Square is trading at close to $200. This was not the only investment that I did this with. I also made this exact same decision with another investment that I'd been very bullish on in the past, Nintendo. And my cost basis was $50. Nintendo, I think, is trading at about $68 today, somewhere around there. Exact same thing happened. And so, again, this is a lesson about timing, and it's a lesson about how you can have the right thesis, you can have the right idea, you can be correct, but you cannot allow the thesis to play out. You cannot allow your price target to be hit because you get scared. You allow your emotions to control you. You allow fear to control you. So it was like the first time it was greed, right? You bought in with the Bitcoin. It was greed. I thought it was going to keep going up. So I bought in. I wanted to get on the greed train. And now this is a lesson of fear. I was fearful that the market was going to go the opposite direction. So I sold to protect myself. And the market punished me. And the lesson there, it's been interesting because it actually is a much more painful loss. I didn't actually even lose money. You know, the first time I made a big mistake, I lost money. And this time I did not lose money. And it's actually a much more painful lesson for me because I left potential gains on the table. And so, you know, I'm entering into a time in my life where I have to kind of go on, yes, a load semester. I don't currently have an income because I'm in law school, and so most of the investing I've been doing has really just been rebalancing. I'm not adding new money in. I'm just kind of taking away from things that have been profitable, shifting into things that I think are more undervalued. Diversification is very important. I think the crypto space right now I think we've entered into a bull market. Bitcoin, let's see. Last time I checked today, sorry. Yeah, okay, so Bitcoin's trading at about 11,500, and it also sold off earlier in March. I think it hit a low of like 5,000, and it's just been in a bull pattern ever since, you know, just steadily increasing over time. And I think we are in a new crypto market, a new bull market. I think the last bull market was the primary characteristic, I guess one would say, would be tokens, ERC, ERC21, ERC. I can't think of whatever they call it. You know what I'm trying to say. That bull market was characterized by these ERC20 tokens. And I believe that this new bull market is going to be characterized by a new form of protocol that is similar and to the distribution mechanism will be that of YFI, right? So that'll be like the defining characteristic. And I don't really know. The thing about the DeFi space and the crypto space is a lot of what we do in analyzing it is like historical kind of analysis because everything's so young. There's not like a lot of terminology and defined standards for talking about this stuff. So when something brand new happens in the space, like what happened with YFI, the Urine protocol, which essentially these DeFi money Legos are starting to be combined in unique ways that is certain aspects of the financial market are emerging in the DeFi space through a collection of these money DeFi Legos. And what's very interesting about the distribution of the ownership or the governance of these protocols is that they are being distributed to the users of the protocol, not just early investors and venture capitalists. And that is what's very interesting about this bull market. I believe that is the defining characteristic of this bull market. So I don't want to talk about quite yet some of the projects I find very exciting and interesting in this area, but I believe it's very safe to say we have entered into, I've heard some thinkers in the space refer to this as phase 5. I've heard some people say phase 4 of Bitcoin's monetization. The election is, I think, it's October 12th. So less than 30 days away. And I wouldn't be surprised if we saw Bitcoin at 20,000 before November 8th. And that sounds like a crazy thing. I definitely wouldn't be surprised if it was at 20,000 by December of 2020. And it's not a price prediction for say. I don't really see myself as a price predictor. I see myself as, it's very important that you have an exit strategy, right? And you have to have a price at which you are willing to sell, because you don't make money unless you sell. So I do have a price. I'm not going to talk about it. It's not based off of any hard character statistics or anything like that. It's really just based off of how I value Bitcoin and at what price I'm willing to depart with some of my Bitcoin. So I don't think commodities is another space I'm very interested to watch grow over the next 6 to 8 months. 2020 oil prices went negative at one point. I believe that agricultural commodities, I've talked about my ETFs that I'm invested in. They're doing quite well. My gold mining stock at one point was up 200% this year. I expect more growth from that over the next 2 to 3 years. Obviously, I still hold on to my bullion silver. I expect bullion prices to hit about $30 in terms of, what's been very interesting about the bullion market is that the spot price is not actually what customers are paying at point of sale. People who sell bullion, they have like their own fees that they put on top of the spot market price. And so I've already been purchasing some silver coins at $30 for market value in 2020, but I do expect the spot price of silver to hit $30 within the next 6 to 8 months. And uranium's another one I'm keeping my eye on. Oil, different agricultural commodities, wheat, corn, soy, livestock. And always keeping your ear to the street with commercial real estate. It'll be very interesting to see how the commercial real estate market plays out over the next 5 years. I don't have a dog in the fight, but just very interested to see, because as global asset prices become repriced in Bitcoin, we will see some interesting disruptions in certain geographic locations which have become stores of value in the way their real estate market prices have essentially just been valued. So I'm going to end this here. Please let me know what you guys think. If you guys have any questions, thoughts. And the next 12 of these videos I expect will be, I don't know. I know these next 3 years are going to be a very different time. And I hope to just do a lot of intellectual growth, a lot of learning, hopefully start going more in depth into some of these protocols and some of these investments and some of my thoughts in the digital asset space. But I really, as I look towards the end of my 20s into my 30s, some of the investment mistakes I've made early on, I can't afford to make those same mistakes now that I have a family. So you have to be a lot more prudent. And that's why it's exciting that you start young, you make mistakes, and you become better over time. So hopefully this was interesting. Hopefully there's something that I said in here that is right. And one day I will go back and look at my own thoughts and critique myself. So, future you, Eduardo, judge judiciously. See you guys. Peace.